Let's start with answers to case number 3, of which covers certain aspects of cost allocation. And let's start with the issue of allocating the costs of support units. So here's the chart. And remember, in the example, we had 2 support units, legal and human resources, 2 operating divisions, Division A and Division B. The cost allocation basis or the cost driver are person hours devoted to each unit. And what we have, of course, is legal and human resources giving services to Division A and B by devoting person hours to those divisions, but also legal and human resources giving services to each other, also by devoting person hours to each other, in addition to the person hours that they devote to Divisions A and B. So the costs and the flows of the person hours are summarized in this chart. And of course, the example here is of 2 support units and 2 operational divisions. And that's not the typical case. If you have organization of any complexity, you would have many more than 2 supporting units and many more than 2 operating divisions. But just to keep the example simple, we have here a 2-by-2 example, and the principles are the same. So we're not losing any generality by keeping it simple and short. The 2-by-2, it's only slightly artificial, of course. Okay, there are 2 methods that you're asked to consider, and the direct method is very straightforward. The direct method says allocate according to the cost driver, person hours, allocate directly the cost of human resources and legal to the divisions, and the method ignores the exchange of services between the 2 support units, between legal and human resources. So it said just ignore it and allocate everything directly to Division A and Division B. Well, that's a quick and simple method. So obviously the calculation is also quick and simple. And here are the allocations. So legal allocates to Division A and B the $2 million in costs, and it allocates by the ratio of person hours it devotes to each division over the total number of person hours it devotes to both, which is 1,000. So it's allocation of 400 over 1,000 and 600 over 1,000 respectively to Divisions A and B. You get the allocations of 800,000 and 1,000,002. And human resources does the same. And again, it's only direct allocation because we ignored the reciprocal relationship. So, yes, anybody had a question? So that's that. So any questions, comments about the direct method? If not, we can move to the reciprocal method. Now, of course, the reciprocal method says, well, we do not want to ignore the exchange of services between human resources and legal. So let's have a method that incorporates that into the allocation. And remember, our objective here is to allocate the support costs to the operating divisions, so that then we can follow by a second stage and allocate all the costs that are accumulated in the operating divisions to our cost objects that may be the products or the services produced or rendered by the operating divisions. So let's look at the reciprocal method. And the reciprocal method really wants to take into account the reciprocity between human resources and legal in the exchange of resources. And the exchange of resources occurs simultaneously because legal renders legal services to human resources, and simultaneously in return human resources renders services to legally, and this exchange occurs simultaneously. So in order to capture that, the simple mathematical tool to capture that is simultaneous equations. And since we have here two support units and two operating divisions, then we're going to have two equations, two simultaneous equations with two unknowns. And the simultaneous equations are set up here. I'm just highlighting them, where we have two unknowns, LE and HR. Now let's carefully define what do we mean by LE and HR, the two variables, the two unknown variables in those two simultaneous equations. By LE here and LE here, we mean the total costs that legal has to allocate. Now, you can ask, but we already have the total cost that legal has to allocate. They were 2 million. But wait a minute, 2 million were the costs that legal had to allocate before it was allocated the cost of the services it got from human resources. So we have to include those too. So 2 million is not really the total cost of the resources allocated by legal. It's just the number that they started with in terms of their own cost, of the cost of legal, before they were allocated other costs, in this case the cost from human resources. And the same is true for human resources. 10 million is not their cost, it's the cost they started with before they got allocated some costs for the services they received from legal. So going back to the equations here, LE is the cost, the total dollar cost that legal has to allocate to all other units, and HR is the total cost that human resources has to allocate to all units. So if we keep those definitions of the variables in mind, we can easily interpret the first equation. The first equation wants to reflect how many dollars in costs legal has to allocate to all other units. Well, it started with 2 million of the cost of its own, we saw that, and then it received a fraction of the cost of HR. What fraction or what share? We find that by taking the total cost that HR has to allocate, and we multiply by the share that HR allocates to legal. What is the share that HR allocates to legal? Well, we are given that HR devotes 200 person hours to serve legal in terms of rendering it human resource services to legal, 200. And the total person hours that HR devotes to all units, including legal, if you sum them up, is 3,200. You can go here and see. 200 to legal, 1,000 to Division A, 2,000 to Division B. Add them up, 200 plus 1,000 plus 2,000 is 3,200. So legal allocates a share of 200 over 3,200 of the total cost it allocates to all units. That's what goes to legal. So now reading again the equation, the total cost that legal will have to allocate, it's the 2 million it started with, its own cost, plus whatever cost is allocated to it by HR, which is HR times 200 over 3,200. Okay, let me just pause here and see if there are any questions about the logic of this equation. Well, the second equation is the very same logic underlines the second equation. The total dollars that HR has to allocate to all units is the 10 million that of its own costs plus whatever LE allocated to it, and LE allocated to it a share of the cost it had to allocate, and the share is 100 over 1100. How do we get 100 over 1100? LE allocates 100 to human resources over a total of 100 plus 600 plus 400 that it allocates to all the units. So it's 100 over 1100, and we have it here. So now we have set up both equations to reflect the simultaneity of the allocations between LE and HR, the exchange of services between LE and HR. So what we have here, we want to solve for the variables, the unknowns, and we have here two linear simultaneous equations with two unknowns, and that's easily solvable. All you have is to refresh your memory of middle school algebra, and you can solve it in several ways. You can decide that you start by substituting for HR in the first equation, the expression of HR in the second equation. So you plug this expression for HR in the first equation, and then the first equation turns into one equation with one unknown, namely the unknown is LE. You save for the level of LE. Once you have the level of LE, then you plug it in the second equation, numerical level, and you get the numerical level of HR. If you do that, you get the solutions. And in this case, HR is 10,239,963, and LE is 2,639,998. Which means what? Which means that reflecting the exchange of services between HR and LE, HR, the total dollars that HR has to allocate to everybody, to all units, the operating units and LE, is 10,239,963, and the total number of dollars that LE has to allocate to all units, A and B and HR, is 2,639,998. So this is it. This is the first stage. Let me wait for open the floor to any questions. Any questions about how you set up the equations? What is the logic behind the equations? What's the meaning of the solutions? Okay, once you have the total that each support unit has to allocate, in this case HR and LE, you simply proceed with the allocations. So we can start with HR if we wish, and we know that HR gives services to A, B, and LE, so it has to allocate the costs for those services. So we know that the total that it has to allocate is $10,239,963. We just solved for it. So all we have to do is to apply the allocation ratios. So to A, it allocates 1,000 person hours it devotes to A over 3,200 person hours that it devotes to everybody. Same thing for B, and same thing for LE. Now we go to legal. Legal has, we know now, $2,639,998 to allocate. We apply the appropriate allocation ratios, and we get the allocations. So the underlying numbers are now the new allocations using the reciprocal method. So basically, note that, of course, we are allocating more. Unlike the direct method, we are allocating more than the 2 million plus 10 million that we allocated directly, because there are more costs to allocate. There are the costs of the services that each support division renders to the other support division, which make the total to be allocated larger, and resulting, these are the allocations. So any questions about the reciprocal method? Yes? Yeah, the 239,963, the 10 million component is what the human resources started with, its own cost. The additional 239,963 is what it was allocated, the cost that it was allocated to by legal. And that reflects the cost of the legal services that it consumed. So that's the rationale here. Good question. Any other questions? Okay, so now the obvious question is, bless you, is relatively easy. In this case, easy question is what method you're going to prefer. And obviously, the reciprocal method has to be more accurate because it reflects the reality of the exchange of services between legal and human resources, which the direct method ignores. So the direct method can be only justified as a simple and quick method in case, if you can make the case, that the magnitude of the exchange of services between legal and human resources is so small compared to the allocations to A and B as to make it immaterial or negligible. So in that case, on the ground of materiality, you could say I'm ignoring it, but there's no other logical reason to ignore it. Now, historically, there was a practical reason to try to use the direct method, even if it was significantly less accurate. And the practical reason goes back to the technology that existed before the age of fast computers. So remember, before the age of fast computers, where calculations had to be done manually or semi-manually, what was the problem? Well, the problem is that in most realistic situations, you had many more than 2 service departments and many more than 2 operating departments. Well, let's assume you had 25 supporting departments and 25 operating departments. Then if you use the reciprocal method, you'd set a system of 25 simultaneous equations with 25 unknowns. If you try to solve this system of 25 equations with 25 unknowns manually, I'll just tell you good luck, because it's difficult to tell how much time it will take you to do that. And to do it in a reasonable amount of time, you will need an army of calculators, a calculating staff who would do it with no assurance that with all these calculations you're not going to get into some significant errors as well. So there was a practical reason not to do the reciprocal method. Well, today this reason disappeared, because even if you have 625 equations with 625 unknowns, if your computers are fast enough, you just set up the equations, they use iterative methods, and they can come to solutions with minutes or seconds. So there is no prohibitive amount of work in solving the system. The only thing that you have to do is to set up the equations, and that cannot be considered as too much work. So there is no practical technological reason not to use the reciprocal method. Now, I'd just like to add one thing. In terms of understanding and the knowledge of the reciprocal method, I'm not that it's difficult to solve 2 equations with 2 unknowns or 3 equations with 3 unknowns. It's simple algebra, but I'm not going to expect you to do that. Just in the case that you have aversion to solving equations, simultaneous equations, so you can rest assured that you're not going to be required to do so in exams, and the reason you're not going to be required to do it in exams because this is not a course in math. It's not a course in algebra. It's a course in management and cost accounting. So in questions in the exams, as you'll see, the emphasis is going to be on the cost logic of setting up the equations, but not on solving them. So just wanted to make that clear. The other thing that I just wanted to clarify, in your text you have another method that is expounded, and that's called the step-down method, and we're just going to ignore it in this course. And the reason we're going to ignore it because it's so arbitrary, is so illogical, that it just doesn't deserve our time, any time we devote to it, including the time to explain why it's illogical or reason it out. So we'd rather ignore that. Okay, second requirement was to say how, if you remain with this problem of allocating human resources and legal activities, suppose using reciprocal method, how do you expand the system by designing activity-based costing? Now, the idea here is very straightforward, that in the example, you were given the decision of the CFO to use person hours, total person hours, as the cost driver. So that is typical of a traditional costing method. Why? Because you lump all the person hours of legal and all the person hours of human resources into one person hour aggregate. And you lump all their costs into one cost aggregate for human resources and one cost aggregate for legal. But remember, in doing so, you ignore the fact that legal and human resources give to themselves and to other departments a diversity of services. It's not one service. It's not just one thing that they're doing. For example, just take human resources. Human resources can provide recruitment services. It can provide career pathing services. It can provide payroll services. And I can go on and on there. We can all probably name 10, 15, 20 major activities that human resources are doing. And each activity has its own cost. And the same is true for legal. So by lumping all the cost as one cost of all the activities, and by adding up all the person hours, one person hour being equal to another, you're, of course, not accounting for the diversity of activities and the diversity of the costs and the different patterns. So this is why the traditional costing method remains, again, a simple and quick method. But if we want a more accurate method, we want to do activity-based costing. And the way we do activity-based costing, we first of all do an activity analysis, a detailed activity analysis of human resources and legal, and we delineate all their activities. Then we group the costs in human resources and legal by activity, all the costs associated them by activity, as we did in ABC. So we aggregate them into separate activity cost pools. And then for each activity cost pool, we choose the appropriate cost driver. So if the activity cost pool in human resources is recruiting costs, so if we still want to remain with person hours, the appropriate cost driver may be person hours devoted to recruiting only. So we have to calculate the person hours in human resources that were devoted to recruiting only, and they'll be the appropriate cost driver for the cost category recruiting in human resources. And we do the same thing for each cost category in human resources and each category in legal. And we do the same allocation using the same reciprocal method, but we do it separately, activity cost by activity cost, and allocate them. So that's the way you expand the system into activity-based costing. Any questions on activity-based costing? Okay. Third requirement, transfer pricing, that looks forward to the whole issue of transfer pricing. We're going to deal with transfer pricing in much greater detail toward the latter part of our course. But just to remind you what the idea behind transfer pricing is, you see, transfer pricing is a special case of cost allocation. what we are saying in transfer pricing, look, for example, if we deal with this problem here, we're saying we have to allocate the cost of legal and human resources to Division A and Division B. Well, we can mandate a cost allocation system, reciprocal cost allocation system, by top management, say the controller's office, or whoever is in charge in cost management. But, so that's one regime. But we could do, alternatively, we could decentralize and delegate authority and say, you know what, to the different units here, legal, human resources, Division A and Division B, why don't you negotiate prices for the services that you exchange? You're exchanging services. You are receiving legal and human resource services. Why don't you negotiate among yourself the prices for those services? No reason not to do that. And those prices are then called transfer prices. The prices for transfer prices are prices for services that are exchanged internally in the organization between different units, and the prices are negotiated by the units. So the units will negotiate what prices they pay to transfer the services to the other units. So Division A and Division B will negotiate with legal and human resources what they pay for human resource and legal services, and legal will negotiate with human resources and vice versa what they pay each other for those services. And whatever they negotiate, then they'll charge each other, and that will replace the cost allocations. So a good number of companies that have this transfer pricing regime. Of course, what happens if they fail to come in agreement negotiating? People are people, right? See how often they fail in Congress, Republicans and Democrats, to negotiate agreements, right? There's no reason why they can't fail here, right? There can be different interests, there can be different ideologies, there can be egos. They may simply, the negotiators may simply dislike each other and therefore not come to any conclusion. Well, there are various answers to that. If you want to have a transfer pricing regime and you don't want to impose it immediately, you can say you negotiate, and if you fail to negotiate, we in top management will mediate. And it may be a binding arbitration or whatever. So these are some of the solutions. We'll talk about transfer pricing and the different regimes in more detail later. Okay. Now we get to the problem of a byproduct or a buy service. And we started with a personal example. So the personal example is a conversation between the driver, who is a friend of Anne's, and she or he, the driver, giving Anne a ride to school. And the question is, what should the driver charge Anne? And of course, they have difficulty coming into the agreement because Anne insists that she wants to pay her fair share. She doesn't want to be a free rider. And the driver says, well, but your fair share is zero. Why? Because I've calculated the extra costs of you driving in, and I have calculated them to be so negligible that they're very close to zero. And if you think about it, the driver is not really lying or trying to just be extra nice. What are the incremental costs of Anne joining the ride? Very difficult to think about any incremental costs, right? Can you think of any? Well,
there's the extra time you take going to your house to pick her up.
yeah, but she lives very close, right? So, yeah, and an extra distance, but so there's something, but it's quite negligible, right? Anything else? Could be something, but is it? So, small, tiny cost there. Anything else? Yes. What is the opportunity cost? Yeah, so that's the tiny cost here. Maybe an extra minute to go to Anne's house, and that may be a tiny cost. Well, it's not an opportunity cost. It's a real cost incurred. But that's a tiny, tiny, tiny cost. And what else? Well, is there any depreciation? Oh, because going 2 blocks? Going the extra 2 blocks? Yeah, maybe a tiny, tiny. Oh, yeah, depreciation of the chair. Yeah, right, maybe. And you know, you could fantasize other costs. If N is very heavy, there's a depreciation in the chair, and if N happens to be very heavy, then there's maybe some extra consumption of gasoline, right? Carrying the weight, but even that is more stretching the case, right? So basically, let's say it's negligible. The incremental cost is negligible. Let's say it's not zero, but it's infinitely small. It sort of goes to zero, like they like to say in calculus. Yes? Yeah, I suppose, right. So there's an opportunity cost. Yeah, you can argue that the time that you could have done something else in the time. What could you have done in the 10 seconds that 5 seconds that you went several blocks? Maybe difficult to conjure, but in principle, yes. In practice, very negligible. So actually, what the driver is saying to Anne, look, I mean, it's negligible. If you decide to buy me a coffee now and then, we'll be even on the incremental cost numbers. So that makes sense. The question then becomes, okay, but what is the alternative? Well, the alternative, finally, the driver says to Anne, look, I want you to feel good. So if you can come up with a reasonable alternative, I'll take it. What is a reasonable alternative? I don't know, reasonable, but what is the alternative? Well, the alternative is obviously to calculate the incremental costs of the drive. Of course, it's true that the driver will take the drive anyway, but what's the incremental cost of the drive? And that's more significant because you go distance, you may pay tolls, you may pay parking, you put all of that, maybe some depreciation, you put all of that together, and there are a good number of runs during the semester or during the year. You put them all together, you get to a number, and then you arbitrarily divide the number. You say you divide it half and half. or 1/3 for Anne and 3/3 for the driver, but it'll be an arbitrary allocation. Of course, on a personal level, since Anne is a friend, the driver doesn't want to do that because the driver will be making money on Anne, right? If we take this, let's assume we take all the costs of driving there, divide it half by half, actually the driver will be making money on Anne because the incremental cost of driving there is negligible. So you don't want, so you may feel very funny to do it to your friend. So let's end with a personal example and transfer it to a business example where you don't feel, certainly in a business example, you don't feel funny making money, right? You're doing business, so you're in the business to make money. So the issue now is different. Well, on a business situation, you could say the following, that the costing, the two different, you separate the costing from the pricing of the buy product or the buy service. You say the costing, I'll do incremental costing because it's the incremental costing that is relevant. On the pricing, I will price the buy service or buy product for what the market will bear. And if I can price it much higher than the incremental cost, so I'll make money on the buy product or the buy service, which is not a sin, is a merit in business. Make money on it. So, you know, you can find any number of examples in business. Let's take a hotel. So let's take a hotel who has rooms that are designed for 2 people, a king-size bed or 2 double beds. But if family comes with more than 2 people, 3 people, maybe parents and a kid, the hotel may say, well, if you come with another person, we'll add a cot or we'll add a bed. And then the question is, what do you charge for it? Well, you still want to know what your cost of adding a bed is, because you may decide, I don't want to do that. Well, you can calculate the costing. You do incremental costing. You say, what is the cost, my cost of buying an additional bed and keeping those beds in inventory? That's a cost, right? What is the cost of wheeling in the bed when necessary? What's the cost of changing the bedding, wheeling in and out? What's the cost of changing the bedding after the people stay on the extra bed? If there's an extra person there, would there be an extra cost of electricity, hot water, extra cost of cleaning? You add all this to an incremental cost. Now, what will I charge? That's a different story, depending on what the market will bear. If the market is highly competitive and you want to lure people to your hotel, and you're in an area which is very competitive, you may want to charge nothing because you may say it's a marketing device to lure people to my hotel, right? My hotel says, if you come with an extra person, we won't charge you anything. So that may lure people who otherwise wouldn't come, right? So in this case, in spite of the fact that you have incremental costs, you may charge nothing. Or you may charge a certain fee, and that will depend more or less on marketing considerations, and that's different from the costing. Okay, I guess we answered, yeah, the business implications. Okay, any other questions or comments about case 3? If not, we can move to the lecture. We have certain things in the lecture that we didn't cover, so let's do that. Okay, lecture 3, cost allocations. Let's talk now about joint costs. Allocation of joint costs. Now, joint costs happen very often in production of goods or rendering of services. Joint costs are costs of using common resources or joint resources to produce more than one product or render more than one service, either because the nature of the production process requires it or because it's more cost efficient to do so. So let's give a number of examples. Let's start from example in agriculture, raising animals. You can raise sheep. You raise usually sheep for wool and mutton. Now, you have a period where you raise the sheep. When you tend for the you tend to the sheep, and you feed the sheep, and you raise them, and you do it jointly for the future of producing wool and mutton. Now, at certain point where the sheep are grown, you harvest the wool, and then you slaughter the poor animals and you harvest the mutton. So that's maybe not a very pleasant example, but it is a classic example of joint production. Those here who are vegetarian and very high animal rights, I'm just using an example because this is done. It's not that I'm advocating the slaughtering animals. That's legal and that's done extensively. So the question is, in joint cost allocation, how do you allocate the joint costs of raising the sheep? What part of it would you allocate to wool, and what part of it would you allocate to mutton when you do the costing of the two products? And the answer is very difficult. I challenge you to find the most advanced biologist who will be able to tell you based on the most recent biological science findings how much of the cost of the feed to sheep you can allocate to wool and how much you can allocate to mutton. We simply don't know. So there's no scientific or logical way to do it. Same thing, other example, you raise cattle, you raise cows for the production of milk, beef, and hide. So in many countries, you raise cows and you milk them, and then you slaughter them for the beef and the hide. The U.S. is one of the few countries with this exception where in cattle you produce a breed of cattle separately for the beef and a breed of cattle separately for the milk for a variety of reasons. But in most of the world it's considered too expensive, particularly in less developed countries, considered too expensive to do that. So that's another example. Let's move to industrial examples of joint production and joint costs. Let's move to the production of oil, of fuels. Well, you start with the oil, you start with the crude, you drill for the crude, you extract the crude from the ground, from the wells, you bring it to a refinery. Now consider the production in the refinery of the fuels. You refine the fuel in the installation that is called the refinery. And you know that with crude, as you refine the crude at different temperatures of the refining process, you distill different grades of fuel. So at a certain temperature, you would distill gasoline, certain temperature kerosene, other temperatures, higher grades of fuel, such as aviation fuel, and so forth. But you use the same refinery, the same facilities. How would you allocate the cost of those refining facilities to any grade of fuel that you distill and sell? These are joint costs, very difficult to allocate. You're a telecommunication company. It's moved to telecommunication services. You serve your customers, and you have local calls that go locally, and you have long-distance calls. But both the local calls and long-distance calls go through a local exchange. It's not far from the community within the community that is served for the customers in this community. How do you allocate the cost of this exchange between local calls? There's one exchange, local exchange. The calls go through the same exchange. The long-distance call will then go through other exchanges as well, but initially they use the same exchange. How you allocate the cost of this exchange to the call. So I think we have gone through enough examples to see that joint costs is not allocation of joint costs is not an infrequent occurrence, and it deserves our attention. So basically the story is that we don't have good ways to allocate joint costs, as you might have suspected. But we very often want to allocate the cost because we want, as business people and as accountants, we want full allocation of costs. So we want to allocate everything to the products or the services. And what happens is, if we don't know of a good logical way that makes sense to allocate, we allocate arbitrarily. So in joint costs, most of the methods that are used to allocate the joint cost to the various products are arbitrary and capricious methods. Well, you can say, if they're arbitrary and capricious, why do we need to know them? Well, we need to know them because we need to know the methods that are most commonly used, so we understand how they are used, and we will acknowledge that they are arbitrary and capricious, but that's that. So let's go through an example to illustrate the most common methods used. And in this chart here, we have a joint production phase where the joint production costs are $20 million. And at some point, the joint production ends, and there's what we call split-off. Why we call it split-off? Because the joint production ends and the individual products are split for further separate production on each product. So usually the joint products have two phases. One phase is joint production, like the refinery, where the first stage is refining all the grades, and at some point the different grades are split, and then there is a further process which each grade is treated separately. So we have the joint cost of the production first phase, and the joint costs of the production are given as $20 million. Then we have a split-off point, and at the split-off point, two products are split off the joint production, product A and product B. And in terms of physical number of units, 1,000 units of A are split off and 4,000 units of B are split off. Now at split off, you can estimate what will be the revenues generated if you sell the products as they're split off. Now, admittedly, when the products are split off, they're not finished products because you have to do further work on them to finish them. So they're intermediate products. They're products in process. But you can sell intermediate products and have some other company finish it off, right? So they have values. So we can ask ourselves, if we choose to sell the products at split off and let somebody else complete them to finished products, what will we generate in revenues? And the estimates are here, 16 million for A and 24 million for B if we sell them at split off. If we don't sell them at split off, we will incur separable costs to bring each one of those products to completion. And the separable costs, in this example, additional separable costs are 2 million for A and 8 million for B. Estimated, 2 million and 8 million are estimated at split off. And then what is estimated at split off is what kind of revenue we can generate if we sell the complete products, the finished products, A and B. And the estimates are $20 million revenues for A and $38 million revenues for B. Okay, so that's the story in terms of numbers. Any questions about the numbers? Okay, then we have three common methods that are used. One is allocation. The challenge is, of course, how do we allocate the $20 million joint production cost to A and B? So the first method is allocation based on physical measures at split off. So the physical measures at split off are 1,000 units of A and 4,000 units of B. So we allocated $20 million joint cost by the ratio of the physical quantities, 1,000 and 4,000, to a total of 5,000. So we get 1/5 allocated to A, 4/5 allocated to B, 4 million and 16 million allocation of the 20 million. Now, why do we use physical measures to allocate the costs? Because they're there. They're numbers, that they're there. There's no really logical reason to believe a priori that the 20 million have to split by the ratio of the physical number of units of the respective products, but it's one arbitrary way to do it. Let's look at two other methods. There's an allocation of joint costs based on sales value estimated at split off. Well, the sales value, if we sell the products at split off, the unfinished products, the products in process, the estimates are 16 million and 24 million in revenue, respectively. Total revenue is 16 plus 24, which is 40. So we allocate to A 16 out of 40 and to B 24 out of 40 to get an allocation of 8 and 12, respectively. So Now the third method is to allocate the 20 million joint costs based on the net realizable value estimated at split off. So let's define what do we mean by net realizable value. Where at split off, we reason as follows. If we take the units into completion, what will be the net realizable value? And we sell them as finished products. Well, the net realizable value is defined as the revenues that will generate minus the added separable costs. So for A, the net realizable value will be the estimated 20 million generated in revenues minus the 2 million extra separable costs. So the net realizable value for A will be 20 minus 2 or 18 million. The net realizable value for B will be 38 million revenues minus 8 millions extra separable costs. 38 minus 8 is 30. And if you add up the net realizable value for B is 30, net realizable value for A is 18. Total net realizable value for A and B is 30 plus 18, or 48. Now with these numbers, we have the allocation. A will be allocated, out of the 20 we'll allocate to A. A's net realizable value, 20 minus 2 over the total net realizable value. And B's realizable value, 38 minus 8 over the total realizable value of 48. And we get an allocation of 7.5 and 12.5. These net realizable value is also pretty arbitrary, because there's no reason for us to believe that if we knew the true costs of the joint product going to A and to B, that the true costs would necessarily split in relation to the estimated net realizable value. The only argument we can give defending this method is to say, if we think that the allocation of the joint costs should be fair to A and B, to products A and B, we should allocate it fairly. Then maybe one criterion of fairness is what can products A and B bear in terms of cost allocation relative to their profitability. And their profitability is reflected by their net realizable value. So we allocate less to A because A can bear less because its net realizable value is less than B. So that's the only quasi-defensible argument that you can give for this cost allocation method. Okay, so those are the commonly used allocation method for joint costs. Any questions about them? It's basically being acquainted with the mechanics. And it's just, the reasoning is, if we have to allocate, we have to, and we don't have a good scientific method to allocate, we have to come up with some kind of a procedure. So these are 3 commonly used procedures. Okay, finally, a final subject that we want to cover today. There is another method that's not covered in the text, but I just want to introduce you to it because it's conceptually appealing, and that's the standalone allocation method. Remember, we said the reason we have joint costs is because we use resources jointly to produce several products and services, and therefore we incur joint costs. Well, in most cases, we use them jointly because it's less costly than using them separately. We use a human resources, many operating divisions use the same human resources department. Why? Because alternatively, each one of them could have its own human resource department dedicated to it, but it would be inefficient, right? Same way to legal. We said in the case of cattle costs, we figure out in some cases we may want to incur the extra cost of raising cattle for beef separately and for milk separately because of the quality or other considerations. But the idea is that in most cases, instead of having joint facilities and joint production, we could theoretically have separated dedicated facilities for each product or each service. Maybe outrageously expensive, and that's why we don't do it, but theoretically it's possible. So we could estimate the cost of each division or each product going it alone in terms of the services. Remember, in our case, healthcare case, we had a joint X-ray machine. Why? Because it was felt that it would be too expensive for Department A and Department B, given their limited usage of the X-rays of their patients, to have a dedicated separate X-ray machine for A and a dedicated separate X-ray machine for B. But theoretically, we could do it. And if we could do it, we could estimate the cost, and that cost is that standalone cost. If each unit and each product will have its standalone facilities. So let's go through a simple example. You have company Z, which has divisions A, B, and D. The estimated costs of divisions A, B, and D of company Z sharing a common data processing facility is cost C of A, B, and D sharing one data processing facility. If A, B, and D share one data processing facility, the cost C would be, let's say, $600 million. Now, if each division has its own facility, its own data processing facility dedicated only to it, this will be the standalone costs. For A to have its own exclusively dedicated data processing facility, the cost will be $300 million. For B, the cost will be $275, and for D, the cost will be $250. So you can see, much more expensive. If each one of them had much more costly. That's 300 plus 275 is 575, plus 250 is 825. So it's 825 million total costs compared to 600 million. So having a joint facility is a hefty cost savings, going from 825 total cost to 600. So obviously there is an advantage in having a joint facility. Well, there are other possibilities of each two divisions having their own facility jointly, own data processing facility, and the third division, the one who doesn't, going it alone. So if AB want to have a joint facility, the estimated cost would be 400. And then, of course, if A, B have a joint facility, D will have to go it alone, and D would incur 250. If A and D had a joint facility, their cost will be 350, and then, of course, C will have to go it alone at 275, and if B and D had a joint facility, their cost of using that facility joint cost would be 285. And then, of course, A will have to be alone at 300. So if you're going to do these estimates, well, the one thing you can do, you can ask yourself, based on these estimates, if you believe, if they're accurate, what is the best cost minimizing usage configuration for company Z? So if you go through all the possible configurations, you'll come here that the cost minimizing configuration, the best configuration is for B and D to have a joint data facility and for A to go it alone. Why? Because BD will incur $285 million in cost. A will incur 300. Together it's 585. It's the best, if you can check all the combinations, it's the best that you can do. It's even better than the 600 of all of them sharing the facility. They save $15 million. So let's assume that given that, they decide to go to the configuration BD, sharing, and A going it alone. So based on a standalone basis, so they agreed, and what happens, how much do they have to allocate among the three of them? They agreed, the three of them. A agreed to go it alone, to give up sharing the common facilities, A, B, and D. B and D went together, so altogether, what is the cost? 585, right? Now, so what they have to figure out, how to allocate 585 in the best way possible, in the most logical and fair way possible. Well, they say, okay, why don't we allocate the shares of allocation? Share A, share B, and share D are the allocation shares used to allocate. Let's do it on the basis of how much each shares, how much there's a cost reduction of each when they go it alone compared to the total cost of going it alone. So the total cost of all three of them going it alone is, let's go back here, is 300 plus 275 plus 250, which is 825. And the cost share, share A is the cost of A only going it alone out of the cost of combined cost of all, total cost of all three going them alone, 825. So the share of A is 0.364. Share of B, it's B going it alone over the whole three, total cost of all three going it alone, 275 over 825, 0.333. And share of D is 250, D going it alone over total of all three going it alone, 0.303. So then you allocate the 585 based on these shares. So you apply the A share, you get an allocation to A 212.9, and you get the allocation to B 194.8, and you get the allocation to D 177.3. Let's go to F for a moment to justify that. In F, you're asked in what extent is it a fair allocation? And the way you can defend it is by taking the allocation to A, for example, is 212.9, right? Here, 212.9. So that's the allocation we achieved for A. Now you have to ask, how much would A incur if it had its own facility, standalone? 300. So by A agreeing not to go it alone with everybody else going it alone, it reduced the cost allocated to it from 300 to 212.9, or it reduced its cost by 30% to 0.7 of what the cost would have been of going it alone with all the others going it alone. B was allocated 194.8 actual, right here. If it went alone, be 275. So how much did it reduce cost? To 0.7 ratio of going it alone. And D, 177.3 actual allocation by the method we use. The cost of going it alone would be 250, again a ratio of 0.7. So this allocation gives everybody a reduction of factor of 0.7 of their allocated cost using this configuration relative to all three going it alone. So you could say you distribute in this allocation, you distribute the cost savings by an equal ratio. So now of course what you could say, going to the other questions, what you could say is either you mandate the allocation or you let them negotiate and figure out the best configuration and allocation on their own. So that looks conceptually more logical and more attractive than the other systems, the standalone allocation method. But now I'll bring you into a secret that in spite of the fact that it might look better to you on a logical basis, it is almost never used in practice. So the question is, if it's conceptually more appealing, why is it almost never used in practice? Can you figure out why? Yes?
You might have some trouble figuring out what all of the pairs are, so A, B, or A, D.
Yeah, because you have to estimate that. You start with a certain structure, right? For example, we started with a structure where all of them share one facility, A, B, and D. In order to implement this method, you have to estimate, hypothetically, what if each one of them had a separate dedicated facility standalone. So you have to separate, you have to allocate A, B, and you have to estimate the costs. Then you have to estimate the cost of all the combinations, as you said. And these are, most of the time, things that you never experienced because you didn't have these structures before. So you have to estimate hypothetical situations which in many cases were never experienced before. And those could be wild estimates. So the estimates can be extremely difficult to obtain, and if obtained can be guesses and can be extremely unreliable. That's one point. The other thing is, since everybody knows that those estimates will be used as inputs to figure out their cost allocations, and if you ask them to participate in the estimates, what are they going to do? They will be tempted to manipulate the figures in their favor. So that would put another strain on how accurate those figures are. So it looks nice theoretically, But in practice, it'll be very, very difficult to work it out in a way that we have reasonable estimates. And of course, if we have garbage estimates, so garbage input, garbage output, so it is of no avail to us to have a system that is conceptually more attractive if it cannot be practically implemented in a reasonable way. So it's just a good exercise to understand the problems of allocation, but in practice, it is almost never used. So in practice, for joint cost allocation, what are usually used are the more arbitrary estimates because they're much easier to come up with.